Ulta Beauty reported earnings, and a lot of you are asking me about my opinion. If I believe the company is a disaster, the stock is a disaster, and if earnings were just really, really bad, if something has changed, if it's still undervalued, what I think about it in general. So that's what I'm going to discuss in a very short video, my opinion, and just let you know what I think. And the stock is down around 7.5% in the after hours. And after hours sometimes isn't the most accurate thing ever. I mean, it could go up and down. It could be green tomorrow, or it could be maybe down 20%. We don't really know, but it's more about the open. But a lot of investors right now are interested in Ulta Beauty, mainly because Berkshire Hathaway disclosed a stake in the company, and a lot of people love to copy Warren Buffett or whatever Berkshire Hathaway buys. They have a pretty good track record, and they opened a position in the company, small position. But this is what got a lot of people interested in the stock. And for this earnings report, it wasn't good at all. Net sales increased around 1%. That wasn't too bad, mainly from new store openings. They opened a lot of new stores. So that was very good. In terms of comp sales, which what really matters amongst retailers, they decreased 1.2% versus an increase of 8%. That was a massive, massive difference. And I just have to say, over the last 2 to 3 years, a lot of retailers had very good years. 2024 has been a terrible year for retailers, especially in terms of comp sales. If you're comparing this year on a very high year, which was in 2023, 2024 is looking terrible. And this is part of my thesis that I highlighted in my Sunday video, that we are already in a recession. We've been in a recession since January of 2024, and we're likely halfway through this recession, and we can see it from a lot of the retail stocks. We don't need the yield curve to turn positive or for the government to tell us that this was a recession. We can clearly see it amongst consumer discretionary and amongst especially retail stocks. And this is what's been showing up. Ulta Beauty declined 1.2%. They also revised down guidance from 2 to 3% in comp sales growth to 0% to a decline of 2%, which was a very terrible one, very bad. Operating margin, they also revised it down around 1%. In terms of earnings per share, that was the best one so far. 25, 20, 26. They barely revised it down to 22.60, 23.50. And this is because the company buys back a lot of stock. It's hard for it to struggle in terms of an earnings per share metric. But still, it wasn't a good report at all. One thing that upset me was the company's share repurchase outlook still the same. It says no change. And with them knowing that such revision in guidance is going to cause, some panic, is going to cause the stock to go down, they should have increased share repurchase guidance, for investors to have something to look forward to. I think that would have been a good move from the company. And it was a mistake. They haven't done it. So all that stuff looks pretty terrible. But the last quarter was also kind of terrible because they've been revising guidance for a few quarters right now. And the company is facing competition from Amazon, you have Sephora, you have all these places. So it has now no kind of a moat. It doesn't have like a huge moat. It doesn't have a massive competitive advantage. People can buy that stuff from many different places. And it doesn't have, this kind of a quality company that's buy and hold forever like Apple and Microsoft. So why did Warren Buffett buy it? Why did I buy it? Why did a lot of value investors buy the stock? And this is because when you're looking for a value investment, when you're looking for a turnaround, it's very different mentality than looking at a quality company to hold forever. And this is a lot of the misconception that people have, is that you can only make money if the company is good company. If it's a quality company, that means you're going to make money. If it's a terrible company, that means there's no way it's going to end up being a good investment. But the best explanation of this came from Howard Marks, which he said, it's not what you buy, it's what you pay. Meaning if you buy the best company ever, even MSCI has been flat for like 4 or 5 years, even though it was a quality company. But it's about what you pay, not just what you're really buying. And the same for MasterCard. He said, and success in investing doesn't come from buying good things, but from buying things well. And if you don't know the difference, you're in the wrong business. If I'm trying to apply this for Ulta Beauty, and we looked at all those negatives, Ulta Beauty right now, if we use the 2260, it's trading at 15 times earnings. 15 times earnings is not expensive at all on a historical basis. The mean was 27 times. It traded as high as 42 times. Now it's trading at 15 times on the lower end of the range. And if you look at last year, which where the stock was trading at, and this is when I first bought it, it was around 15 times earnings. And after the company showed some signs of growth, that everything is stabilizing and expectations were starting to look better, the multiple went from 15 times earnings up to 21 times earnings within 4 or 5 months, and it came back down as low as 12 times, and now it's sitting at 15 times earnings. So 15 times earnings for Ulta Beauty, for a company that has pretty much no debt. They have $413 million of cash and cash equivalent, and pretty much no debt other than some lease liabilities, which is really like, long-term debt. And they do have a good buyback program, 549,000 shares. They buy back 5 to 6% of the company every single year, and they have no debt, and they have some kind of a good business model, because even though we're in some kind of recession, a lot of retailers have been struggling a lot, but people and women, they're still buying makeup, they're still going there, they're still doing a lot of things. Even though things have slowed down, but it's still very solid in my opinion. So you're getting somewhat of a solid business with no debt and good margins, good management at 15 times earnings. Is not expensive at all. If you look at the analyst estimates, they expect this year to be the worst year for Ulta and to get better next year and to almost have a double in earnings per share from $22 to $41 by 2029, which is fiscal year, which is 2028. So 5 years from now, even though they were 50% wrong and earnings per share went up 35 or 40%, with 15 times earnings and no debt for this company, I don't think this is expensive at all, especially if you consider the comp sales effect, meaning this year has been really bad. Next year is going to be much easier to beat. It's going to look much better on a comp sales basis. And if you take all these things into consideration, in my opinion, Ulta Beauty is not expensive here at all at 15 times earnings. I am worried of them keep revising the earnings estimates or estimates in general. And if they keep doing it for another 1 to 2 quarters, then I would start to worry. But I believe this has to be it, because it looks pretty conservative to me, from a 3% increase to a decrease of 2%. So I think this is pretty conservative. With their expansion into Mexico, things have to start looking better very, very soon. So nothing has really changed in my opinion. I wish it was a little bit better, but it wasn't. The stock is down 7%. We don't know what's going to open at tomorrow, but around 339 to 341, the stock is trading at 15 times earnings using their lower end of their earnings per share estimate or guidance. And I still believe the stock is solid as a turnaround, not as a long-term investment, but as a turnaround. The sentiment changes, things get better. That's what I would do, and I sell it and move on. That's what I do with these stocks. I like to have, quality or growth companies for the long term. And Ulta is not a growth company. It's mainly a company that's inexpensive relative to its fundamentals, which aren't the best, but relative to the price, that makes the stock a good opportunity. And this is my opinion on Ulta Beauty stock. I hope you enjoyed it. Not financial advice as always. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.